Oh, good morning. Thanks for joining Underwriters Marketing Service. My name is John Countryman with Underwriters Marketing Service, helping the life department with your sales, illustrations, product questions. Really happy today to be joined by Chris Salomon from Protective Life Insurance. And Chris has been in the industry since 1994 as an agent, in a brokerage housing. He's been with Protective almost 9 years now, Chris. So we really appreciate you taking the time and sharing your expertise with us today. And just a note, as we get started, this call will be recorded. The phones are on mute, and we'd ask you to please put your questions in the questions tab or in the chat tab. But if you would prefer not to be on a recorded webinar, feel free to leave. Otherwise, just know that it is being recorded. One of the things that I've been seeing a lot, especially on YouTube, is the protector commercials. And we all are protectors. I'm sure Chris will put a plug in for that. And that's really been one of their mottos that they've been going strong with. And just feels that brings us some sort of satisfaction in the industry that we are protecting our clients. Without any further ado, turn it over to Chris.
Thanks, John. And yes, I just took myself off of camera. I think it may improve the visibility of the PowerPoint presentation. Good morning, everyone. Thank you for joining UMS and Protective Life this morning to talk a little bit about Protective Life. From listening to what John was saying and the recording message, it sounds as though everyone is on mute. Save your questions till the end. I have a lot of material to cover. However, I want to cover my first segment first, and then if I can, I'll take a pause to see, John, if maybe we can open it up for questions before I continue on. As John had mentioned, I have been with Protective Life for 9 years. My name is Chris Salomon. I'm a regional vice president. I cover the Mid-Atlantic states. I've been with Protective Life for 9 years. The things that I want to go over today, if we have time for all of it, and if we don't, that's okay. It just means that I'll have another opportunity to speak to you in the future. I want to talk a little bit about my why. I think we've all heard situations of why we all do what we do. I want to discuss Protective Life's strengths, stabilities, and protection. And I want to talk to you a little bit about why I think you should be considering Protective Life insurance products if you're not already doing so. I think we have some pretty cool nuances that can help clients. And you'll see toward the bottom there, we offer 3 guaranteed universal life products, which I think, well, today is fairly uncommon for the market space. Why life insurance? Why my why? Well, up on the screen here, or your screen, you can see a picture of a little boy. That's my son, and that picture is circa somewhere 2010. I had brought him to a farm for October pumpkin picking for the largest pumpkin. My why? Well, he is my why, but there's more to it than that. When I was about 8 years old, I woke up one cold New Jersey February morning and went downstairs into the kitchen. My mother took me aside and she informed me that I had lost my grandmother the night before to illness. Sad event, but what that really meant, because my grandmother believed in life insurance, was there was an amount of money set aside for my mother, my father, myself, and my 2 brothers to help us financially with what life throws at us. Most of the money had gone to my parents, which enabled them to purchase a home in New Jersey for a growing family without a mortgage in northwestern New Jersey. That amount of money also enabled me and my 2 brothers to graduate 4-year colleges without debt. And furthermore, that money helped me buy my first home at the age of 27. That life insurance death benefit that arrived into a small trust. I'm not a trust fund baby. I'm not related to Solomon Brothers Financial, and I'm not part of the Solomon Bindings and Skis Corporation. That amount of money gave me enough of a leg up to secure a financial future moving forward where I could then build my own family. So why do I do what I do? Why do I own life insurance? Why do I believe in life insurance? Because life insurance changed my life. If we look at my generation, Generation X, only 36% of Gen Xers have exceeded their parents' wealth by this point in time. I'm 50. Millennials, the generation behind us, behind me, are 26% less likely to own their own home. Life insurance changes lives. This is my son today at the age of 15. He's been recruited to play for the U.S. national team for American style football as a left offensive tackle. He's why I do what I do. Protective Life, strength, stability, and protection. Founded in 1907, we're a large corporation. We have over 3,000 employees. The bottom section, I think, is the most important piece here that I think you'll be interested in. Growth through acquisitions. All of us know that when premiums, be it life insurance premium, auto insurance premium, long-term care premium, disability premiums, when they come in the door to a life insurance carriers, those monies are invested in stable value interest-bearing securities, investment grade interest-bearing securities. They do that so that the money that they take in will be available for claims in the future, not putting it at risk. When they do that and they purchase those securities, interest bearing, we all pretty much remember a couple of years ago when the pandemic began and interest rates were darn near close to zero. Life insurance carriers had to invest their money, getting very, very little rate of return. We had to do the same thing at Protective Life. However, one of our mainstays on how we conduct business to solidify our financial stability is through growth through acquisitions. We have successfully acquired 58 different life insurance companies or their unprofitable blocks of business, unprofitable to them. We currently have $4.8 billion invested in this virtuous cycle. Companies you may know of or be aware of that we own: Empire General, West Coast Life, Mutual of New York, Great West. If you sell annuities, a couple of years ago, you probably were very aware of Great West. Protective Life owns Great West. We also own the reinsurance block that supports Genworth Term that was sold between the year 2000 and 2006. When we make these acquisitions, we do those acquisitions for pennies on the value of the dollar. What I mean by that, for example, when we acquired Mutual of New York back in 2014, we announced that acquisition in October of 2014 for $1 billion. We expected to make that $1 billion back to us and start to kick a profit after 4 years. That block of business allowed us to recoup our $1 billion in 3 years, 1 year ahead of schedule. As we make these acquisitions, these profitable acquisitions, it minimizes the impact of lower interest rates. I know we've all seen that we're in a rising interest rate environment. It's truly I feel the first rising interest rate environment we've been in essentially for about 20 years. Here are our ratings. We've been rated AM Best, A or better since 1940. Fitch just upgraded my corporation at the end of March to AA minus, which I believe is the second spot. Financial stability is what we're about. We want to make sure that we are around to pay the claims to the customer's beneficiaries to whom you've sold. We design products that will deliver with no surprises, no disappointments. We work to do the right thing. We are all protectors, and by that, Protective Life designs products that will perform in a manner in which you intended them to perform when you sold them. Over the past 6+ years, we've seen other carriers, I won't mention by name, they've raised costs of insurance on their existing blocks to make those blocks more profitable to themselves at the detriment of policyholders. Many of those policyholders, if they had a limited duration or a limited guaranteed death benefit product, received letters asking them to contribute more money to their life insurance policy because the cost had gone up. And in many cases, those costs were prohibitive and clients had to look for a different new policy with a different carrier. At no point in time have we ever raised our costs of insurance on any of our books of business or protective life business. It's not to say that we won't moving into the future. I don't have a crystal ball, but we have never done it with anything that we own. Things that we offer. We offer term insurance. Again, I appreciate that you're on the phone. The two term type policies we have, the first of which is going to be my more expensive option. Let me explain what this one does because it brings a lot of value to your clients. It's not the cheapest thing out there. My other term insurance product is a couple of pennies more expensive than the cheapest thing out there. But let me start here with Custom Choice Term UL. You see it in the top left corner, Custom Choice Term UL. What is that? It's actually a universal life product with a universal life chassis, but we only allow it to be sold in durations, level durations, so to speak, of 10 years, 15, 20, 25 years, and 30 years. You can sell it in a level premium duration period of time. Like I had mentioned, 10, 15, 20, 25, 30. At the end of the level period, the premium remains the same. The death benefit begins to decrease, and that simply answers the question for clients when they called us and asked, what can I have for the same premium I was paying? Well, you can keep your product. The death benefit will start to decline over the next 5, 10, 15, 20 years. It's top 5 pricing to its peers. The cool things about this product are because it looks like term, but it's actually a UL, you can 1035 exchange into it. You can short pay it, you can single pay it, and you can stair step pay it. It's convertible for 20 years or to age 70 to one of 3 of my GULs. The convertibility is better than what's on currently in the market space, and the flexibility for premiums is outstanding. Taking a look at this and avoiding sticker shock, we look at what Custom Choice Term UL will do. In the first row, we did a 20-year level term of $500,000 for a 45-year-old male preferred non-tobacco. You can see in the first year for policy years 1 through 20 on a level term-like basis, for $500,000 in coverage, the annual premium is $646 or $1.29 per thousand. In year 21, you'll notice, actually I misplaced slides. This one goes later, my mistake. I'll come back to that in a minute. I want to show you an example of what I mean by level premiums and then death benefit decrease, and then I'll skip back up. So what I did here is for a 45 male standard non-tobacco for $750,000 in coverage. You can see the annual premium under the premium outlay column is $1,008 for $750,000 in coverage. And you can see at the end of 10 years, in the 11th year, the premium stays the same, but the death benefit starts to decrease. Scenario number 2, remember I said we can stair step this premium. Same person, same face amount, same level premium. You can see it in year 11. It's still that same 1,008. But what did I do here? Well, I said we can short pay it, we can single pay it, or we can stair step pay it. What I did here, because it's on a UL chassis, is I underpaid, so to speak, for the first 5 years, and then I paid catch-up premiums for the next 5 years. This can give this client a cheaper entry point into owning $750,000 in term. It's about $200 cheaper than what the original entry point was. If I flip back up, remember it was $1,008. For the first 5 years, I save about $200, about $180 maybe. Think of it this way. Have you ever spoken to somebody that said, hey, I just want 5-year term? As far as I can recollect, the last carrier to offer 5-year term was Minnesota Life. And that was about 3 or 4 years ago. They discontinued the product. And furthermore, that 5-year term was fairly expensive. If you ever have a client that says, I'd like 5-year term, think about Custom Choice Term UL with Protective. This is a stair-step example. Or we can single pay it. The next example, same premium, same person, same face amount. But what we did here is I'm showing a 1035 exchange or a single pay of $9,750 going in the first year. And then the client doesn't have to pay another dime until year 11. When, because this was a 10-year term, remember that the face amount begins to decrease over the course of time. So we start to see that in year 11 for this 10-year term. These are some of the flexibility options you have with this term product through Protective Life. Now, the second term product I have is called Classic Choice Term. It's not a UL. So I hit this slide earlier, avoiding sticker shock. You can see the difference between company's Term A and Custom Choice Term UL. Our premium on the right is slightly more expensive, $717 versus $646. I'm looking at the very first row for the same $500,000. However, in year 21, the other carrier still provides $500,000 in death benefit, which is going to cost, because they've gone into the annual renewable term rate, it's going to cost $12,500. With us, it's still $717. The amount of death benefit provided is less. However, it answers the question to the client, what can I still afford? Now, I don't know about carrier A, but I can tell you with Protective Custom Choice Term UL, this product is still convertible for the first 20 years to one of my guaranteed universal life products. Okay, now skipping ahead. Classic Choice Term, you'll see a penny on your screen, and there's a specific reason for that. Classic Choice Term is traditional term as you've come to know it. It doesn't have the flexibility of a short pay, a single pay, a stair-step pay. It is level premium term. It comes in 10, 15, 20, 25, 30, 35, and 40-year durations. Issue ages are dependent upon, durations are dependent upon issue ages. It's convertible to one of 3 of my GUL products. We have outstanding monthly premiums. The reason why I bring that up is somewhere in the neighborhood of about 80% of all term that is sold is presented to a client with an annual premium, but when the application is taken, the client generally asks, okay, what is this going to cost me per month? There's a game life insurance carriers play, and they say, okay, well, we know that agents will go out and show their clients term insurance on an annual premium, so we'll try to have the lowest annual premium. Most recently, up until recently, what those other carriers had done is they'd make their monthly premium a lot more expensive. Sometimes we wouldn't notice because we're in the process of taking an application. We want to get the application completed. We want to get it submitted so we can get paid and we can protect our client. What we've done and what we are committed to do with this product is we are committed to go toe to toe with Banner Life. You'll be interested that Banner just reduced their term rates. I believe the beginning of this week or late last week. We reduced our term rates last Monday, not yesterday, a week ago. We are within a couple of pennies on a monthly premium and a couple of pennies on an annual premium. If you've consistently looked at term premiums and thought, look, it's term insurance, I want to give my client the cheapest thing and let's move on. Here's what I want to present to you or put over to you. For 1 penny more, I believe we provide more value. That value is with a Protective Life Classic Choice term product, you can convert to one of 3 guaranteed universal life products that we have. That's a piece of flexibility for your client. I don't believe it's offered by that other inexpensive carrier. We have an online submission platform that is 22 years old called Telelife, also known as Easy App. It's an online platform. When you get onto the system, and you can get into the system through myprotective.com. If you haven't sold Protective Life, let's me and you talk to John Countryman, and we'll figure out how to get you an account so you can get into our system and apply for life insurance with your clients over the phone or in person. You can do the quoting in the system. You do the part 1 of the application in the system. You notify the client that they'll be receiving a call from Protective Life asking some pretty important information, personal information. We do the phone interview. We order the APSs. We order the parameds, the exams. If labs are necessary, we order those as well. Here's the kicker. Let's say when we underwrite, and I typically think Protective Life underwrites easier than Banner. That's my own personal opinion. But let's say Protective Life gives an offer on your client that you don't like. We will give you the medical records, the APSs, the exam results, and the lab results for free, so you can go out and shop it somewhere else. We have a quick submission platform, which is Telelife. We have competitive underwriting, and our new business underwriting team has great service. We're seeing better and better turnaround times as we come further and further out of COVID. That's Classic Choice term. Typical term. My other term is Custom Choice. Non-typical term with a short pay, single pay, stair-step pay situation. Currently, Classic Choice term, our post-level premiums. So if we were looking at a 20-year term, we know that the level premiums are level for, well, 20 years. What happens after that? Our premiums after the level period don't jump up as dramatically as many of my term competitors, Carrier A, Carrier B, Carrier C. Annual premiums for the 20-year term, you can see 424, 424, 425, us 422. In year 21, Carrier A sees a jump of 1,500%, 2,700% for Carrier B, 2,400% for Carrier C. We go up as well. We go up by 400%. We don't go up as dramatically or as drastically. Guaranteed death benefit UL. John, we're at about 25 after 11. I want to start getting into our permanent options, which are highly competitive as well. But before we do that, I would like to see if there's anywhere where you can open up for questions about the term portfolio before I move on.
Yes, one question that came up, we're doing the questions by the chat or the questions tab. The one question that came up was, what are the 3 different ULs that it's convertible to? I think a lot of the people on the call are familiar with the lifetime assurance, but could you fill us in on the other 2?
Sure, I definitely can. So on your screen, here are the 3 other GULs I have. Lifetime Assurance GUL, Advantage Choice GUL, Index Choice, Guaranteed Death Benefit IUL. And I'll hit each one of these individually to show you what the differences are.
I think one thing to note when we look at these options, many people when they first buy the product don't think of it, but it comes up so often, and we see it here every day at Underwriters Marketing Service. People calling in, they're no longer insurable, they want to try to convert, and they've back in the day gone for that 1 penny savings, and they got one product that if you spreadsheet it, it is the most expensive product on the market. So I think that just goes further to show the value of the protective conversion option. Sorry to interrupt.
No, John, I really appreciate that. As a producer, I was a producer for a number of years, and I understand. Even with my own current career, you develop an area and a sense of stability and things that you're used to. If you are or have been committed to selling other inexpensive term carriers, I simply ask, give us a shot. Let us show you what we have. I think you'll be very satisfied with our offerings, especially in term. And a couple of years down the road, because look, I'm 51, I work to stay healthy, but people don't generally get more healthy as they age. I too want something that I'll be able to convert to down the road. And the reason why I want to do that, well, it goes back to my why. From a producer perspective, from a business model perspective, it also gives you an opportunity to have an additional sale, which is additional cash flow into your business in the future, all by helping clients. If I think back when we went from 2019 to 2020, we had principles-based reserving, we had 7702 issues. Carriers had to begin on January 1 to reserve even more money if they were offering guaranteed universal life products. Between December 2019 to January 2020, we went from 17 well-priced GULs that you'd be satisfied and pleased with to sell to your clients or friends and family. Because of premium-based reserving rules that required carriers to have more cash uninvested on hand to pay benefits moving forward, they had to raise their rates on their GULs or drop their product altogether. The number of products offered between December 2019 to January 2020 fell by 23%. March 2020, we see COVID-19. Carriers issue premium limitations. They did that because interest rates dropped and they couldn't invest the money and get a return on it. They limited 1035 exchange amounts, and they further increased the prices of their GUL products. April 2020, the US Treasury interest rate drops to 61 basis points, a little bit more than half a point of interest paid on a 10-year Treasury. Again, carriers announced price increases. Do you know, look at the bottom, do you know what Protective Life did? In April of 2020, that same month, we launched our third GUL product, which is Lifetime Assurance GUL. July of 2020, Prudential dropped their GUL, got completely out of the market space and re-entered later on with a guaranteed variable product. They did that because variable is more profitable to themselves. Principal Life in 2021 said they're no longer going to sell to the retail market space. They're only going to have life insurance available for the business owner market space. Your options are becoming smaller and smaller. Protective Life is committed to the GUL space, just like we're committed to the term space. These are the three products that we offer. I showed this slide a little bit earlier. I'm a Toyota guy. I've owned Toyotas for the past 30 years. That's my own choice. I'm not faulting anyone else for owning any other car manufacturer. It's just what I do. There's a Toyota Corolla, there's a Toyota Camry, there's the high-end model for Toyota, that's the Lexus. The reason why I have owned Toyotas is I've never turned a Toyota back into a dealer and purchased a new one without that older car having at least 280,000 miles or more. Now, during the course of my ownership experience with this car manufacturer, I've had no major repairs, ever. I've had to replace some belts, I've had to replace the brakes, I've had to change the tires, and I've had to change the oil and the radiator fluid, sometimes the transmission fluid. I've never had a major flaw. Hey, great plug for a Toyota, but I look at protective life products the same way. Toyotas, for me, have performed in a way in which I wanted them to perform when I bought them. Protective life products are designed to perform in the way in which you and your policyholder expected them to perform as long as they own them. Lifetime Assurance GUL, it's a level pay only. Think if you've been in the business for quite a long time. I've been doing this for 28 years. So if you've been doing this for 20 plus years, you probably remember GULs in the mid early 2000s, 2005, 2006, 2007. You literally paid a level premium every single year and your death benefit was guaranteed. That's what this thing is. The guarantee has to go to age 90. So when you illustrate it, it has to go to age 90. But you can illustrate it to guarantee to whenever you want it to go to. You can guarantee it to 90, 91, 92, 102, 105, 106, 115, 17, 120, 121. It doesn't do 1035 exchanges. It doesn't do short pays, single pays. Think of this as your least expensive option to get a guaranteed death benefit between here and whenever you and the client decide it should go to. It's termed to whenever you want it to go to. I know I said UL, and it is a UL, but it's a completely dialable guarantee that's highly cost effective. The middle one, Advantage Choice UL. It's more customizable. You can have a single pay, a short pay, a level pay. You can stair step it. What I mean by stair step for this product is a little different than the first stair step option I showed you. What I mean by stair step is here, I'm age 50. I've looked up my own life expectancy on some of the computer modeling software you can get online. My life expectancy is somewhere around 79 and a half. So if I were looking at a GUL for myself, I might look at Advantage Choice and illustrate a guaranteed level premium until my age 85 or 87. And then one of the really cool things you can do with our product is if I was to guarantee my product to 85 for me, I then can ask my illustration system, please find out the next level premium to guarantee it from 86 to 105. By doing that, I've given myself a less expensive entry point to owning a GUL, paying a lower premium during those years leading up to and beyond my life expectancy. So giving myself additional protection while having it be affordable. And then if I do outlive my life expectancy plus 5 or 6, I now know what my future premium will be, and I will pay that moving forward to keep my policy. If you sell in the internal rate of return market space, this stair step option should be very, very interesting to you. And you, me, and John can work together to show you exactly how that works and how customizable it is. Now, Indexed Choice, Guaranteed Death Benefit UL, it's the most customizable. Again, level pay, short pay, stair step pay, 1035 exchange, lapse protection only until age 90. Advantage Choice, lapse protection out to 121 if you'd like it. It's priced most efficiently with a death benefit guarantee between 90 and 105. So the IUL, death benefit guaranteed age 90. Beyond that, we depend on cash values to carry the policy beyond age 90. The super cool thing about Indexed Choice is the internal fees of the product are drastically low. So we have better cash at the end of age 90 than our competitors do. I have examples, and I'll share them again with John at the end of the phone call. I have examples where with 0% rate of return on my IUL, I have better cash value than other carriers such as John Hancock, Prudential, and my guarantee goes longer. I can get better cash value with 0 interest because the charges in my product are drastically low. When I run those other competing carriers like a John Hancock, they need at least 5% every single year to get their cash value to even make it to age 90. I don't need additional interest. I could show John that and he could share it with the group. Any questions so far, John?
There was a comment in the questions area that another carrier has just announced this week that they're dropping their GUL. I think their name begins with the president on the penny. Lincoln Financial, I think they.
It's got to be Lincoln Financial.
Yeah, Lincoln Financial Group. Yep, that was it. They announced early this week.
That's
now there might be down to 12, Chris.
Now we're down to 12. So here's just a quick graphic for the very first GUL we talked about. This is the level pay one, and it just gives you some highlights. Here's a cool thing with the level pay product, Lifetime Assurance GUL. Many of you have heard of return of premium features on guaranteed universal life products. Many of those guaranteed universal life products, when they offer a return of premium feature, generally speaking, those other products offer 50% of the premiums paid can be returned in year 15, or 100% can be returned after year 20. However, there's generally a 60-day exercise window, meaning if I get to year 15, if I don't cancel my contract and ask for 50% return of my premium during the 60 days from policy anniversary moving forward for the next 2 months, that window closes and that benefit is gone until you hit year 20 or 21 where they offer the 100%. And again, it's only exercisable for 60 days. Here's what's cool about mine. We offer a 25% return of premiums paid beginning in year 11 for every single year thereafter with no exercise window. We limited the return of premium to, at most, 50% of the death benefit. However, we don't hold the client in a corner with a 60-day window that someone somewhere has to remember to exercise if they want it. We allow it year 11 plus, no questions asked. Just a quick case study. Male age 55, standard non-tobacco, a $500,000 death benefit with Lifetime Assurance GUL. What I'd like to show to you here is I said that you can guarantee this to 90 or 91, 92, 93, 95. So I have examples of guaranteeing this product to age 90, 95, 100, 105, 110, 115, 120. The purpose of showing you this slide is after the guarantee period ends, dependent upon what guarantee period you chose. After that, the premium will go up annually thereafter, just like term insurance. So the point here is if you look at age 90, 95, and 100, if we look at the middle column, the initial monthly premium to guarantee this person for $500,000 to age 90 is $573. If we went 5 more years on a guarantee, the level premium to do that is $620. If we went to 100, instead of guaranteeing to 90 or 95, the premium is $659. If you go over to the far left, and let's go back to age 90 guarantee, in 91, the premium is going to be $68.76. why wouldn't I simply pay $50 more per month to get an additional 5 years to guarantee it to 95? And the $60 is the difference between the 620 and the 573. Or $80, $90 more per month gets me 10 years longer guarantee, and I don't have to worry about that giant premium on the back end. Just wanted to show you this so that you're aware that after the guarantee period ends, the premium starts to go up. Choose a little longer. It doesn't cost the client that much more, and it also puts that negative conversation of, well, you only guaranteed me to 90, and then look at the premium. Guarantee it to 100. Guarantee it to 105. We've all seen the Prudential commercials where there's a bunch of people standing in a park rolling toilet paper to see how long their retirement's going to last, right? So, but I know people are living longer and et cetera, et cetera. Some of the articles you read about COVID say we're not going to live as long. However, what I always find humorous about we're always living longer and longer is, I believe I read an article about last week that said that the oldest person in the world died at 118. And that was like a couple weeks ago, 118 years old. But 2 years ago, the oldest person was 115 when they died. Well, wasn't the person that was 118 actually 116 years old? So look, people are living longer. Medicine is getting better. Medications are getting better. Treatments are getting better. People are going to the doctor more frequently and figuring out what is or is not wrong with them. And treatments are better. We don't always have to guarantee to 121, especially if you're underwriting a client that's table rated. Don't guarantee it to 121. Guarantee it to 90, 95, 100, 105. Even 105 might be a stretch for, say, a table D for David. Anyway, I got off on a tangent. Any other questions so far, John?
Hi, Chris. As far as a question, Tori McKiernan, another life case design specialist here, wanted me to make sure that everyone is aware of the ease of the protective apps. You don't actually have to be on their website. They do allow different platforms that we have available on callums.com, including the IGO applicate, the eApp system, and the Applicant, both on our webpage for the agent portal.
You know, John, that's a great point. Tori, that's a great point. Yes, we are on IGO and we're also on Applicant. And here's a cooler part of that. It's not just for term insurance. It's for all three of my GULs. That portal allows you to to apply for not only permanent insurance, but term insurance. And wrapped into that online application system, when we make the outbound phone call to the client, we will if they're shopping for term, we will automatically consider them for accelerated underwriting to see if they are healthy enough to get a policy within 5 days. Now, when we do that during our telephone interview, we don't tell the insured that we're doing that. The reason why we don't tell them, Principal Financial has or had an accelerated underwriting platform. And what they found and what we saw was that producers were telling their clients that they were going to be submitted into a platform for accelerated underwriting, and they would be possibly having a policy in the next 5 to 7 business days. And what they found was many of the clients didn't receive accelerated underwriting because they weren't healthy enough. So that led to a lot of applicants being disappointed because they felt like they didn't get something. They were overpromised on the front end and didn't receive what they thought they would get. We do it differently. We don't tell them we're considering them for accelerated underwriting. However, if they qualify for it, we tell them at the end of the phone interview, you've qualified for accelerated underwriting. This process is going to go a lot shorter than you expected it to. You should have your policy in about 5 to 7 business days. That feels like a win to the client instead of, oh, I didn't qualify, a loss. So just food for thought. Tori, thanks for bringing that up. You kind of brought me down a different situation. I do see that there was a client over on or a question over on the side that talked about living benefits. I'm going to go through the other GULs fairly quickly. Protective Advantage choice, that was the middle car, the Toyota Camry. This is 1035 exchanges, surrender charge for 9 years, 2-year rolling target premium. We have an ROP on this that will provide return of premium of 50% back to the client beginning in year 21 or 100% beginning in year 26. With us, there's a 60-day window. Remember, on the last one, there was no 60-day window. You can do it anytime for 25%. This one has a 60-day window, which is more in tune with what the industry is doing. Index choice, I think this is a great product. It's easy. We have a 1-year point-to-point on an S&P 500. I'll say this, having been doing life insurance for 28 years, at one point in time, I was the life insurance product for one of the large national BGAs. I've had situations in my career where I've been able to literally tear apart a life insurance product and be able to understand how they work inside. I am not an actuary though, and I don't talk to my shoes. Our IUL is easy. We don't have non-guaranteed bonus rates in the future. Look, they look great on paper with my competitors. They look awesome on paper. They're non-guaranteed. No one knows what's going to happen in the market space and the economy in the next 5 years, let alone 20 or 25 years from now. They look great on paper today. But going back to my original statement, we design products that will perform in a way in which you and your clients expected them to perform when you sold them. We don't sell products betting on some future event that may or may not happen. Index account, I'm going to skip through this. In our illustration system, if you run my lifetime assurance GUL, there's a report that you can include, John can include, Tori can include, that will also give you some quotes on the back pages to show you what the same premium into lifetime assurance GUL would guarantee as far as advantage choice or index choice. We can have a quick phone call on that at a different time. I know living benefits were brought up. I want to get to the living benefits piece here fairly quickly. Before I do that, I want to give you a quick sales idea. A lot of people ask me in relation to custom choice term UL. That's the term product on a UL chassis. Why would you ever 1035 exchange into it? Let me give you an idea. Male age 50, preferred non-tobacco. That could be Chris instead of Matt. I'm Chris, by the way. Current situation. He earns $125,000 in income. There's an $800,000 death benefit, which is permanent insurance. He's been owning it for several years. It has $200,000 in cash value. Matt, well, kind of like me, Chris, you're in your prime income earning years. You probably have kids that you've been planning for college, continue to plan for college education. You're planning for your own retirement. How do I save more and how do I protect my family potentially even more? Needs more income replacement. Doesn't need the cash value. He likes the option. Concerned with chronic illness. So this will dovetail into chronic illness. What can we do? Option one. Well, we can do a 1035 exchange from the existing policy into an advantage choice GUL. Take the $800,000, buy $2.5 million in death benefit, guarantee it to age 95. Option one. That new product has 50% ROP, return of premium, if they surrender the policy in year 20, 100% in year 25. The old policy has no chronic illness. This one has my Extend Care chronic illness rider, which behaves a lot like a long-term care rider. We've provided a monthly benefit for Matt from our policy of $11,700 a month. That's a direct death benefit reduction dollar for dollar when that is exercised. The 90-day elimination period, the insured needs to qualify once a year, and listen to me closely, with their own physician. The old policy has ongoing premiums. The new ongoing premium is $17,858. Option two, Existing policy, we know what that is. No chronic illness, ongoing premiums. New coverage. We take the 1035 exchange from the old carrier. We at Protective can split that between two products. I don't believe many carriers can do a 1035 split within their own company. They don't have the systems for it. We can buy a custom choice term UL for 20 years for $2 million. We can buy a $674,000 index choice guaranteed IUL. That'll guarantee that product to age 90, and the cash surrender value will help the policy last until age 121. This option gives Matt no ongoing premiums moving forward. It gives him $2.6 million in coverage through age 70, and it gives him $674,000 death benefit to tap into for chronic illness needs in the future should he need it. This could be a reason why you do a 1035 exchange into something that looks like term. I'm not going to hit on VUL today. I don't think we have the time. The Extend Care rider, which is my chronic illness rider, here are some factoids about how people are covered, what they expect, what the expectation is for a need for long-term care or chronic illness benefit needs. That's my mom. That's my little boy back when he was about 3. Hey, my mom passed away in 2014. And I mentioned earlier, myself, my 2 brothers, lucky enough to have life insurance, death benefit proceeds introduced into our lives at a very young age to change our lives financially. When my mother passed away, she had a long-term care product, which was through a carrier that is out of Boston and sponsors a major baseball park. Whether you sell Protective Life or any other carrier from a long-term care or a chronic illness need perspective, I will say that from my own personal experience, the product my mother had was reimbursement. I wish it wasn't. The product I would opt for would be indemnity. Here's why. I lived about 10 minutes away from my mom. My 2 brothers lived about 13 minutes away from my mom. When my mom got ill and we knew it wasn't going to end well, we all stepped up and were there. Someone was there every single day for 24 hours. In the last few months, we were all there. We hired an at-home health aide and an at-home nurse to take care of her. Not to make the story go on too long, but with reimbursement, what I found with that other carrier, a couple of things. First, we hired the nurse and the at-home health aide, and we had to file receipts. For a living, I travel. I have to save every single receipt from when I travel so I can get reimbursed from my company, travel expenses. It's the bane of my existence. When my mom was sick, I then had to start saving and filing receipts to John Hancock. John Hancock would then call me and ask me interrogative questions on what the true nature of the cost was, even though I had the receipts. Secondly, they sent an audit nurse to my mother's home to watch her to make sure she could not shower. As we all know, 2 out of 6 ADLs, bathing is one of them. They had to ensure that she wasn't cheating the system. Shame on fraud, but I didn't like that situation. With Protective Life, we are indemnity. You ask for what the benefit, you ask for your benefit, we give it to you, provided you qualify with your own physician after the first 90 days. Let me put this to you. Let's say I wasn't a wholesaler and had 2 brothers. Let's say I'm making a living and I'm working at Home Depot. And in order to take care of my mom, I got to take a leave of absence and I'm not getting paid. By taking care of my mom, if I had a Protective Life chronic illness rider, we could have filed for the benefit we wanted. If we had bought up to the full 11,700, we could file that because she would have qualified. That could have not only helped offset my mother's expenses, but because I'm not working, it could have supplemented mine as well. So food for thought. Again, I want you to sell protective life, but if you sell anything at all, sell indemnity and sell something where you know what the cost of that rider or benefit is up front, not when we file for it. So we can do up to, highlighted in blue, we can do up to a 5% of the death benefit, which means if you're selling smaller guaranteed UL cases, the 11,700 can be, whoops, I skipped ahead too far. The 11,700, you can get that full benefit out of a GUL on the last bullet point for a $234,000 policy, life insurance policy. Other carriers limit you to 2% or 4%. 2% of 234, I don't have a calculator, but that's a lot less than the 11,700. So is 4%. Lower cases, you can put this protection on there and help your clients. John, that's all I have for today. I know we went just about an hour, but I see that most people stayed online for the full thing. Any other questions?
Now, at this point, Chris, we'd just like to thank you for your time. Protective has really become one of our leading carriers at Underwriters Marketing Service. So we hope to continue the relationship. We appreciate all the support that you and Protective provides Underwriters Marketing Service and our producers. I'd like to thank all those who attended today. Thank you for your business. Thank you for your interest, and certainly look forward to discussing more details, getting some of this information out to you. Tori will be sending out the Protective product guide so that you'll have that readily available and call us with any questions. Thanks for your time again, Chris, and thank you all for attending. Don't
Thank
forget,
you everyone for your time.
call ums.com, 800-524-1774. And parting words, Chris?
I work with 72 different brokerage offices just in the Mid-Atlantic region. And Underwriter Marketing Services consistently is one of the top organizations I work with every single day. There are many offices out there that don't even come close to the abilities and the offerings that UMS has. If you're not consistently doing business with UMS, you should be. John, thanks for your time today, and everyone, thanks for your time today.
You're welcome. Thank you, everyone.